You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, SPIKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about Spikes at miaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. Volatility Views is also brought to you by Matrix Executions, LLC, an agency broker-dealer focused on best execution and trading workflow automation. A technology-driven firm, Matrix is led by trading pioneers with decades of experience designing and building best-in-class solutions for options markets. Matrix connects to all domestic exchange venues and multiple international exchanges and serves both institutional and individual clients. For more information on Matrix Executions, LLC, please visit matrixexecutions.com. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is Friday. It is noon Central. It is 1 p.m. Eastern. It is time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as from the ever-evolving these days Options Insider Radio Network. Glad to see so many of you are joining us as we embark on this journey for the Options Insider Plus and Pro. A lot of cool stuff coming up, including your second taste of the Pro content coming up later today with the return, the much-anticipated, long-awaited return of Options Oddities. That should be a fun one. That's coming up about an hour after the show. And everyone gets to check that out this week. So what a fun time it is to be alive here on the network. So stay tuned for that. If you like yourself a little bit of the old unusual options activity, that should be a fun one. And of course, wherever you listen to this program or any of our content, make sure you keep rating and reviewing. You have seen just an explosion of newcomers, not just to the vol world, but also to this network over the course of the past year and change. They need a place to turn in these crazy, troubled, volatile times. So we're happy to provide that. Keep rating, review, and keep those questions coming too. We do have to hear from all of you folks out there. And let's see who we're hearing from on the program today. First, let's go out to the Matrix Hot Seat. We are joined once again by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com, by way of a Gamma Trader near you. Did I get that right? Is it Gamma Trader, sir?
No, it's Gamma Radar, and it is the Robinhood Trader.
Oh, I combined the two. There you go. I created a new product for you, Gamma Trader. How you like that?
I like that. We used to have a product. We used to have a system at Group 1 called Gamatron that you would use in to trade, low dollar stocks with super high gamma. When in Sun Micro, I'd be long 1,000 of the 2.5 calls, and so you would just set it to trade umpteen thousand shares of stock every nickel, and you'd end up doing all these gamma scalps throughout the day, and it was pretty neat.
Gamatron must have been great until you were sued out of existence by Megatron, of course.
Yes. Well, Megatron actually killed Gamatron.
Yes, he wouldn't sue.
Transformers the movie.
He would just wipe you out of existence completely.
Yep. That was a harrowing scene for young Mark Sebastian when he saw Megatron kill Gamatron.
Yes, 2 scenes that marked the early Mark Sebastian's life, the death of Optimus and the death later on of Gamatron. Ironically, both at the hands of Megatron. He's an evil bastard out there. And also joining us here, holding down the MIAX hot seat this week, old friend of the program, hasn't been on in a little bit, Mr. EUAN Sinclair. He's a researcher these days over there at Hull Tactical. You probably also know him from 1 or 2 books he's written in the space over the years, including Volatility Trading, apropos to this program, back in 2008, and Option Trading, Pricing and Volatility Strategies back in 2010, and the newest addition to the canon there, Positional Options Trading, an advanced guide that came out last year. EUAN, welcome back to Volatility Views for the first time here in 2021, sir.
Well, thanks for having me. And quick disclaimer, all the opinions here today are mine and not Hull Tactical's, etc. Also, I thought I was a huge nerd, but you guys just spent a good minute talking about Transformers.
You obviously haven't listened to the network in a while. We can go deep into 80s pop culture if you want here on the show networks. Let me know anytime you're down for that. We can go down those rabbit holes.
You're old and you're a nerd.
Of course. Yes. You haven't listened to the Option Block. The first show we do every week kicks off these days with an 80s wrestling Guess That theme song. A lot of fun moving parts here, EUAN, that you're just coming up to speed in. Speaking of coming up to speed, what possessed you to release a book last year in the height of the madness, the height of the pandemic, sir? It was a great time because everyone's at home to read about volatility, right?
I actually submitted the book at the start of 2019. It's just the lag time on getting things published is enormous. So I'd like to say it was some sort of piece of strategic genius, but it really had nothing to do with it.
Let's leave it there. It was a very tactical plan on your part as we keep on rolling right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the show we break down the week that was and indeed still is, from about trading and trending analysis and unusual activity, all sorts of fun perspectives. A bit of a truncated week, of course. Markets were closed here in the U.S. for the Memorial Day holiday, but a lot of vol lighting up the screens out there nonetheless. Coming into today's show, where, of course, everyone was waiting that big jobs number. Remember the last time we did this jobs numbers dance? The number was terrible, and yet the markets just shrugged it off and rallied over 1%, I believe, by the end of that day. So everyone's waiting to see if we'd see a repeat of that, and we saw a better number this time. And guess what? Markets rallying yet again. Most of the major indices firmly in the green. S&P up about 0.75% coming into showtime. Dow up about 0.4%. NASDAQ fully leading the charge, up almost 1.5% when we kicked off the show there. So a lot of green on the NASDAQ screen, of course. That means coming into showtime, we had the major vol products taking a bit of a break, but of course they were lower last week. So still net from our last show, they were up, if ever so slightly. Coming into the start of the show, we had spikes right around a 17. That puts it effectively unched. It's up about 1/4 from where it was last week. Same deal for VIX Cash. It was at about a 16.5 when we kicked off the show. That was up about 1/4 as well. So both of them effectively unched from this time last week. Of course, this time last week, they were getting beaten down as we headed into the long weekend. And now we had a whole weekend. We're right back to where we were this time last week. VVIX, of course, the vol come into showtime at about a 109, puts it up about 4 points, ever so slightly. Still frothy, but not quite at the levels it was during the height of the madness, the height of the pandemic. Ewan, we'll kick things off with you. It's been a while since you've joined us on the program. In fact, I don't think you've joined us throughout all of the madness that has unfolded so far here in 2021. Of course, the meme stock revolution, the return of volatility, and then the drubbing of volatility, and then all the other fun madness that has unfolded over the course of the past year. So maybe let's start there. Catch us up. What has this mad 2021 been like for you? And then B, what is lighting up your tape and catching your eye out in vol markets this week, sir?
Yeah, 2021's been a bit strange because we live in a very fashion-driven world. And I think traders like to sort of think they're immune to that and we're all sort of hyper-rational beings and so forth, but clearly we're not, and the markets aren't. So it's been strange because we've had a whole bunch of little fads this year. You know, we started with the SPACs and then the SPAC collapse, and then we had the non-fungible tokens, which everyone was going crazy about, and you know, that NBA Top Shot stuff, and that seems to have died down. And
he got so excited, he knocked himself off the thing. Well, I'll get him back. Mr. Meatball, while we're waiting for him to come back, why don't you break down your week in vol, sir? What's lighting up your tape out there this week, sir?
I mean, we'd be remiss to ignore all the meme-ness that happened this week with AMC blowing higher and bringing up a lot of names with it. You know, names like BlackBerry blew higher, Bed Bath & Beyond went to $44.51.
If you're about to say it went beyond, I'd have to hang up. Ewan obviously didn't pay his phone bill this week. We'll get him back on the show. But Bed Bath & Beyond did go beyond. So
yeah, it went nuts. Express Holdings went nuts. There's another one. Express. When was the last time anybody shopped at an Express? Just kind of craziness abounds. Workhorse, Fizz blew up, just all kinds of names blown around higher. And, you know, for a couple of days, VIX and AMC were correlating, which is ridiculous. And then, you know, that seems to have dissipated. The VIX is getting smoked today, and we're watching the volatility complex kind of collapse a little bit. Vol futures are down significantly from their highs in the middle of the week. The curve has really fallen into a really nice contango, and you know, the VIX looks like we got an outside shot of a close in the 15s today. That feels like it could happen. Obviously, we'll have a little weekend effect on Monday, but it does feel like there is some real downside on vol, and the S&P up nicely. Apple, all the mega caps are blowing higher today, and the NASDAQ 100 is up 1.73%. Hey, Ewan.
Oh, I figured you cut me off because you thought what I was saying was just intrinsically stupid.
We were offended by your 80s comments from earlier there, sir. But Mark, go ahead, finish up your thoughts, and then we'll have Ewan chime back in before the Skype gods smack him down again.
Well, you know, feels like we could see an end of day ramp. The all-time high for the S&P is about 4,235. Feels like we could see that ramp higher, and you know, VVIX, the vol, maybe we're going to get back below 100 next week. So that's kind of what's on my radar today.
All right, let's go back out now to the Hull tactical seat. Let's see if he's paid his phone bill now. So we're all good to go. Ewan, you were in the midst of breaking down the year that's been for you on the fad front. You said you were huge on NFTs. I believe you said you bought all of the NBA Hot Shots NFTs, and then we just lost you, sir. So pick up with that.
Yeah, where I was going was I think on the sort of normal options front, the big difference has been the rise in call volumes and the rise in retail trades. I know the average trade size has dropped a lot. I think we've seen a lot of people coming over from the, you know, daily fantasy leagues, you know, sitting on their phones, nothing to do last year, started buying options on Robinhood, which I think is great. You know, it's like you hear a lot of professionals be like, oh, these stupid retail guys, but these stupid retail guys have made a ton of money. So maybe we should stop calling them stupid. And if they are stupid, frankly, if I'm playing a game against someone, I want to play against bad players. So I feel like a lot of options guys are like, I wish these guys would go away and then the markets would get back to normal. I'm like, this, to me, we've spent 20 years trying to get people to trade options, and now they're here and you're complaining.
I could not agree more, Ewan. That said, some of the craziness, I mean, who's happy with all this is Ken Griffin. He's making bank. Some of the volumes we're seeing don't always make a ton of sense and are a little nuts. So I kind of want your thoughts on, on gamma squeezes a little bit. So yesterday in AMC, with the stock with vol at near 400 for 30-day vol, the June 4th, so expiring today, 145 calls traded 173,000 times.
Yeah, for I believe like 2 to start with, right?
They closed 50 cents with AMC at $51. They were 200% out of the money, and they were paying, and you were getting 50 cents for that option. 67,000 of those are still traded today. What is going on with this kind of near-dated short, this near-dated, way, way, way out of the money stuff that we're seeing, in your opinion?
Okay, so I don't think there's anything new here. I think what we're seeing is what's happened in options markets forever. We're just seeing it in a very concentrated timescale. And we've known forever that very far out of the money options trade as lottery tickets, right? And particularly with retail guys. They're not evaluating this on the basis of implied vol. They're buying it because they can make a lot of money and they can't lose much. So if at the start of this week, or maybe the end of last week, you'd bought the 30 calls in June, you made a ton of money. Why not buy a few of the 145s? Just take house money, throw some at it. Now, I'm not saying mental accounting is a good idea, but it's certainly the way people behave. And so I think that's it. I don't think there's anything intrinsically irrational about that. I mean, we were up 400%. We quite easily could have gone up 200% today. I don't see there's anything crazy about that. And you see that sort of all the time in a lot of markets. You'll see people buying teeny calls in the S&P 3 years out and stuff. So I think that's all it is. It's people buying lottery tickets and probably with house money.
Interesting. You've been around the space, obviously, for a while. You've written a few books on it. We've had a lot of people coming on the network over the course of the past 6 months, ever since really the GameStop meme stock bonanza kicked into high gear, really talking about how this was something they had never really anticipated, never really seen before. Underlying trading at sustained 1,000 plus levels of volatility for a while. Call skew, as you mentioned, getting bid up to astronomical levels and then staying there for sustained periods of time. Sounds like you and this doesn't sound as much of an aberration in your view, sir.
No, I'm not saying that. I mean, these are crazy times. These are relatively big cap stocks. And one of the reasons you don't see, 5-digit implied vols or whatever is because the stocks that have these crazy vols don't have options on them. The penny stocks don't have options. So what we're seeing here is like a thing we haven't seen in this space before. So that's genuinely different. But also it sort of shows up a lot of the sort of fundamental misunderstandings people have about options. It's like people are wondering where their gamma is. Well, because when you're at 400 vol, there is no gamma. People are wondering, how did I make money when I'm long puts and the stock came down? Well, because volatility went from 400 to 200. And a couple of days ago, I think practically speaking, every option had like I'm going to get this wrong way around. Every option, no matter whether you're long calls or puts, you would have lost money on the move. Like nothing had the delta that you thought it would have. So these things can always happen. They happen in indices. It's just, this is all the sort of thing that people say causes, Black-Scholes is broken. I mean, Black-Scholes is no more broken than it ever is. It's just showing the craziness that can happen in some of these assumptions. Like you'll have an at-the-money option that had like an 85 delta, which, people kind of assume it's a 50 delta, and it never has been.
Yeah, you're right. That call went out fast and furious. You talked about it here on our network. As soon as the meme stock and the GameStop thing really took off, we saw a lot of people who you think would know better, and out there saying, yeah, Black-Scholes is fundamentally broken, and particularly how we're pricing the call wing in a lot of these super active, super juicy names is fundamentally broken. We need to revisit the notion. I think somehow going out there and maybe applying some excess premium to the call wing across all of these names, that was somehow going to fix this, EUAN. That always rang crazy to me. I mean, the market's going to dictate where these skews go, but it sounds like for a lot of people, EUAN, they thought this was it. This was the moment. This was the straw that broke the camel's back. Black-Scholes, fundamentally broken. You can never go back, EUAN.
No, it's just the same as it ever was, right? I mean, you stick an implied vol in there until you get the price to match whatever the market price is, and you work from there. It's just, in this case, the implied vol you had to put in was somewhat higher than you'd expect.
Yeah, Black-Scholes broken, yet also genius, because it has the best fudge factor in the world built right into it there. I smell another book in your future, EUAN. What do you think? Maybe How to Trade the Meme Stock Skew Palooza. What do you think? We can workshop the title a bit.
It's a blog post, at least. I try to keep my books, honestly, to the point where I've actually learned something new and have something new to say. So if the timescale is anything like the last gap, it's probably going to be about 25 years, I think, until the next one.
Yeah, I was going to say, by the time, if you finished it today, it wouldn't get published until 2024, and we'd already be on to whatever the next iteration of the hot thing is, and people would be like, meme stocks? That was 3 years ago. What's he talking about out there? So yeah, a lot of fascinating stuff. We could keep going on about meme stocks forever. I got a feeling we'll probably come back to that throughout the nature of the show. It is kind of just imbuing all of the volatility discussion out there these days. Let's look out now to the vol space in particular, starting futures land. VIX futures coming into showtime. Like we mentioned, things a little bit lower out there in that front portion of the curve. That June future was at about almost half a point lower than it was this time last week. The July future roughly unched coming into showtime. Is that right around 20.5? And the AUG future up ever so slightly. So we saw a little bit of inflection there in that front portion of the curve. We're still looking out to like a February timeframe. We used to be talking about that plateau shape and how the futures plateaued around that October timeframe. Obviously, things have evolved a little bit out there, but still a little bit more juice. You go farther out in the curve, even though not as much as there used to be. Mr. Meatball, any thoughts here on any interesting developments or evolutions you noticed in the VIX futures term structure this week, sir?
Yeah, they really never caught much of a bid when we were down yesterday. VIX really, yesterday being Thursday, VIX never really caught much of a bid, and it got faded pretty fast. The VIX futures curve has been really sticky here. I'm really interested to see how next week plays out, because there's a pretty decent amount of juice between that June future and the cash index right now, and even more between July and the cash index. So for instance, with where the futures are right now, EUAN, you're going to like this trade. And I know we'll get to options, but as everyone listening to the show knows, the real underlying for VIX options is the future on right up until we get near settlement. And they're letting me buy the 1716 put spread that is in the money by 63 cents for less than 40 cents. And that's because that June future has been so sticky that there's a real opportunity to take advantage of some convergence there between the cash and the future.
EUAN, what are your thoughts on that trade? And if you have any thoughts on what's been going on out there in the land of VIX futures, sir, have at it.
Yeah, well, the VIX futures have been very sticky for a long time, and particularly, the back of the curves. And it seems we're at a point now where people really think, I think it's like when you've been driving on the expressway at 80 miles an hour, or if it's the Dan Ryan, like 140. I think when you come off onto an exit ramp, you think you're going 30 is slow. Whereas 30, if you're driving around town, is perfectly normal. And I think that's what we've got with the VIX. We think, based on where we've been recently, that the VIX of, 16.5 is really low. There's no way you can sell it at these levels. But it's significantly higher than the median value over the last decade, which I think is like 15. And it's also significantly higher, depending on how you measure it, than the realized vol's been recently. So carrying the VIX futures, that's not a great trade right now. But I think it is sticky because people are anchored to this much higher level that it's been.
Yeah, people always have that frame of reference issue in the vol space. And you're right. Let's go back to 2017 and a VIX of 16. Oh, my God. The house is on fire. The world is burning down. That's so high. And now, of course, flashback to last year or even a few months ago and a VIX of 16, now threatening a 15. It seems comparatively anemic. And you're right. So many people have entered the world of options and the world of volatility for the first time over the course of the past year and change. They know nothing but a VIX, north of 40 and 30. So this is, to them, it's like, oh, this is fire sale days out here in the land of volatility. So it is, at the end of the day, all about the frame of reference out there.
I hope they hang around long enough to, become good, consistent options traders. We need more people. We want people. We want it to be a bigger pie.
Yeah, that's the truth. You mentioned it kind of earlier in the show. You said we wanted more options traders for years. Now we got them and people are mad. The flip side of that is we hope some of these, that's why we keep saying to people, go out there, rate and review, get them to enjoy the content. It's not just for us. We like the people that come in. Of course, that's great for us, but giving them some sort of sane outlet to talk about and analyze this stuff on a regular basis will benefit them in the long run. Otherwise, they're out there buying AMC 140s for, 20 cents and saying, where did my money go? And the thing's gone in a day, gone in a couple of hours now. So we want to migrate people away from that type of trading. So hopefully we could keep a decent portion. We know this huge explosion of retail, some portion of them are going to vanish into the ether because they're throwing their money away on crazy AMC 145 calls. But the portion we could reach and get to learn about, maybe don't do that. That's people we can keep and talk to and have become lifelong options traders, which is better for everyone at the end of the day. Speaking of options, let's get on out there now to the vol option space. Let's start in Spike's land. Spike's putting up some paper. In fact, they didn't wait for our show last week. They put it up right after our show, pretty much. They put up, looks like a four-way looks like an iron condor was a June 17-15 against the 2025 vertical, of course, iron condor, effectively two strangles. You can call it what you will. It looks like an iron condor to me. Could be a stranglepalooza if you want to call it that way. Either way, it seems like paper might have sold it. We'll see. 17-15. Let's see. They did it for, 135 on the 20 calls, 75 cents on the 25 calls, and then 60 cents on the 17 puts and 18 cents on the 15 puts, all that 500 times. So 2,000 contracts going up there. Other top contracts out there. We got the July 50 still open out there in Spike's land. Number 2 would be the June 25 puts. And then we got the June 50s for number 1 out there. So the 50 strike, for whatever reason, is resonating out there in Spike's land right now. Let's move on out to VIX options land. Actually, a pretty active day. The ADV has been ticking up over the course of the past couple of weeks. Remember, it wasn't that long ago we were threatening to break 400K in the wrong direction. Now it's threatening to break 600K in the other direction. Coming into today's show, it's at 595,000 contracts, up about 6,000. So it's flirting ever so briefly with breaking that 600K level again. 468,000 contracts on the tape today. So a good chance of breaking that again today. Let's break down the top positions out there in VIX options land. Cost you 155,000 contracts to break into the top 10. That's about what we've been seeing of late out there. That gets you to the June 21 puts. Number 9, 163,000 out there of the June 15 puts. Number 8 is our first, by the way, 60-40 puts to calls again. So puts outpacing calls again in the top 10. Probably what you expected. Last week, it was a coin flip. It was 50-50 calls versus puts in the top 10. But this week, puts edging them out. Our first call here is number 8, $1.68 of the June 60s, 6-0. So shall we say an optimistic strike. Number 7, 168,000 of the June 16 puts. Number 6, our second of 4 calls in the top 10, 171,000 of the June 30s. Number 5, 201,000 of the June 18 puts. Number 4, got a little put strip here, 210,000 of the June 16 puts. Number 3, 213,000 of the June 17 puts. And you know what the top dog is. Number 1, number 2, still that July 25-40 vertical, still open for size. In fact, looks like some more piling in here on the 25s. The 25s are now open for 284,000. The 40s open for 254,000. So go figure, they didn't take off that vertical this week. Probably not the best week to be taking that one off. They're obviously in there for a much bigger pop than certainly what we saw this past week. Ewan, do you spend any time watching the world of VIX options? And if so, sir, which trades or developments caught your eye this week, sir?
I watched the space. I think the information requires quite a lot of wrangling. It's not always obvious why someone has bought a certain option, what they're thinking, whether they're bullish or bearish, whether it's a hedge or a speculation or whatever. So no, I couldn't tell you anything at all relating to what you just went through.
Welcome to our world, sir. This is what we struggle with every week here. We have to encapsulate it all in an hour. The entire world of volatility trading. Now you're seeing my troubles, Ewan. Maybe you write a book about that, the troubles of analyzing vol in an hour. But you're right, it is a challenging thing to do here. Nevertheless, we will soldier on and attempt to do just that. Let's break down the week that we've seen out here today. Like we said, a pretty active day, 468,000 contracts on the tape. Let's do a quick top 5 out here. What are the most active contracts today? Today's the most active June 17 puts, 48,000 of those bad boys, followed by number 2. June 16 puts all the time today. Go figure. 34,000 of those are number 2. Number 3, the June 18 puts, 33,000. Number 4, July, out to July puts. July 16 puts, 31,000. And round out the top 5 most actives today, July 17 puts with 31,000. So it's pretty much all puts all the time in the top 5 out there today. Yesterday, a much quieter day, only 342,000 contracts on the tape. The most active, though, was pretty active, 56,000 of the July 16 puts, followed by number 2, 24,000 of the SEP 18 puts. Numero trace here, June 50s, 15,000. Number 4, June 22s, 13,000. Round out the top 5 here, about 12,000 of the July 85 calls. Once again, getting out to those fun strikes. Wednesday, similar paper on the tape, 366,000. The most active contract out there on Wednesday, 27,600 of the June 18 puts. Number 2 here, 22K of the June 30s. Number 3, 21,000 of the July 18 puts. Number 4, about 19,500 of the June 20s. And round out the top 5 on Wednesday, 15,000 of the June 35s. And then round out the week here, Tuesday. Remember, Monday we were closed. Tuesday, 397,000. So overall, a pretty anemic week outside of today, which is interesting that the ADV has managed to tick up at all this week. 397,000 contracts on the tape. On Tuesday, the most active, once again, back out to the 70 strike, the August 70s, 15,500 of those to number 1, followed by 14,600, number 2 of the June 18 puts. Number 3, 13,200 of the July 40s. So some interesting strikes going up on Tuesday. Number 4, 12,000 of the June 21 calls. And rounding out the top 5, about 11,000 of the June 19 puts. Remember, no paper here on Monday. Mr. Meatball, sir, a truncated week. A few interesting things going up. Anything catching your eye in the world of VIX options this week, sir?
Yeah, yesterday, Thursday, was not the busiest day on the planet for VIX. But one trade did catch my eye. Simultaneously, a customer bought just under 50,000 of the July 16 puts, and then 24,000 of the September 18 puts as a package. Bought both. That was a little eyebrow raising to me. Volumes on downside puts continue to be pretty big. As I'm looking today, about 30,000 of the June 18s have traded, 48,000 of the June 17s. And 34,000 of the June 16th, even 25,000 of the June 15s that are currently in a nickel have gone up today. So there's some pretty heavy trading on June downside that expires in a little over a week. Busy day for July puts as well. 31,000 of the 16s, 31,000 of the 17s, 23,000 of the 18s. So we're seeing some pretty significant near-dated put buying in the volatility complex today, and that's been kind of the theme for the week.
Kind of hard to fault them. The vol was coming off this week, so if you're going to lean one way, probably head into the dark side. Speaking of dark side, it's kind of all dark side all the time out there in the world of the ever-eroding vol ETPs. Ewan, I know you like to watch the vol universe. Do you ever spend any time watching and analyzing the products that our audience loves to fade the hell out of, namely products like VXX, sir?
Oh, yeah. VXX is VXX and UVXY are great products because they are a relatively rare example of something that's very accessible to retail traders, but also has obviously it goes down, but it has a very good reason for going down. I'm not sure that everyone understands the complete guts and mathematics behind it, but nonetheless, it has a very clear reason for what it does. It's very accessible to people. I think it's a great trade. I mean, it's easy to make fun of people who short these things, but I mean, they've made a lot of money, right? What was it listed at? Like 20 billion or something? And where is it now? Like 35?
Yeah, we certainly don't make fun of those folks here on the show, Ewan. They're the lion's share of our audience, the folks who love to short VXX and UVXY. So we would make fun of them, Ewan, at our peril. Yeah,
I mean, it works. And it's like you'll see, I don't know, on Twitter or something, which is obviously not a good place for any reasoned comment or debate. But as soon as UVXY will have like a 30 or 40% spike, you'll see people like, how do you like your shorts now? Well, I sold it on a split adjusted basis of 800 or whatever. I like it pretty well still. Thanks.
Yeah, it's funny. When we first started doing the show, which was quite a while ago, the VXX short trade was kind of a bit of a nuanced beast. We saw it. It would mostly line up in the Jan expiration cycle, and it was a lot of longer-term players, folks who came in, who understood what you were talking about there, and the longer-term erosion and how it impacts the product. And they wanted to get in, put on these out-of-the-money puts in Jan, a year or two out. And it was kind of a set-it-and-forget-it kind of sleepy trade, and people in the business who knew about it would do it, but your proverbial grandmother from Iowa had no idea what the hell you're talking about when you're saying, hey, there are these vol products, and they erode like crazy, and you should get in on the downside. It was way beyond them. And now fast forward a number of years here, the vol market has certainly evolved. And even over the course of the past year and change, it has evolved again, and people are rushing in, and we're seeing, open discussions about things like gamma explosions and other crazy things in mainstream publications that we never would before. So the concept of a vol eroding type product and getting in on the downside is no longer, shall we say, an insider secret. It's kind of out there. And so we're seeing people lining up on these dark side trades across the board in much nearer term than just a year or two out in Jan puts, even though we do see those out there. Speaking of which, let's get into what we're seeing out there right now. VXX coming into showtime's at about 33.5. We got a 33 handle in VXX now. Listen, it's down about half a point. Doing decent paper today, 134,000. The ADV is going back up again. It's starting to move the right way. I think some of these symbology issues that have dogged it for the better part of the last few weeks post-reverse split are finally getting sorted out. It's up about 12,000 from last show, up to about 199,000. So getting back up to the 200K level. Remember, it was threatening 400K not too long ago. So it's got a ways to go yet, but at least it seems like it's rounding the corner there. In terms of what people are trading out there, it's kind of all puts all the time again. 70-30 puts to calls. Number 10 out there in the top sizable positions in VXX land right now, about 19,000 of the June 35 puts. Number 9, 20,000 of the June 30 puts. By the way, it's nice to see mostly VXX here. Got a few, actually not mostly, it's still some legacy VXX1, aka non-split adjusted strikes in there, but we're starting to get some actual strikes you folks are trading right now, breaking into the top 10 again. Number 8, going back to the ladder, 20,000 of the June 10 puts. Number 7, 21,000 of the June 15 puts. Number 6, 21,000 as well of the June 11s. Number 5, again, these are all VXX1 listeners, 23,000 of the SEP 9 puts. Number 4 is the June 20 calls, about 24,000. Number 3, 25,000 of the June 9 puts. And the rest are all small strike options, 30,000 of the June 11s. And number 1 still out there, still 32,000 of the SEP 10 calls. We can't get anything on the more relevant strikes that usurps that yet. But, we're starting to see those trades roll off the board. We had our guest last week kind of counseling. If you still have positions in some of those legacy VXX1 strikes, it certainly would behoove you to probably get the heck out of Dodge. Liquidity on those is not exactly going to grow. So if you have positions on those, might want to migrate them to a more shall we say, liquid and relevant strike. In terms of what's lighting it up out there today, top positions, I should say top trades out there today in VXX, we got the June 28 puts going out actually on the 18th. So in the weekly, it's not today. Doing about 12,000 of those, followed by the June 34 puts going out today, 6,500 of those, 6,500 as well of the June 30 puts going out also on the 18th for number 3. Number 4, about 3,500 of the June 32 puts going out on the 11th next week. And rounding out the top 5 in VXX today, pretty much all puts all the time, about 3,200 of the June 33 puts going out today. Mr. Meatball, we've seen quite the downside move in VXX over the course of the past week. What are you and the crazies in your pit chat? What have they been up to this week, sir?
Yeah, VXX and UVXY both getting a pretty nice punch in the face. They both look like they're heading significantly lower. UVXY is now below 34, VXX as well. We've been trading downside in those names. You can actually calculate kind of how much they're going to lose on a daily basis over time. And, if we get a VIX at 15 next week, by Friday, you could see UVXY like 28. So there is some real downside. I've been buying some, relatively inexpensive puts because the market makers, and here's why this works. The market makers are trading volatility, not directional opinions. And they're just delta hedging UVXY all the way down to oblivion. And so they don't mind selling out of the money puts that are going to make me money and going to make them some money. So that has been a pretty nice tactic. UVXY did have its reverse split last week, which was glorious. And I think both of these, you should see a pretty decent uptick in option volume. And with the two of them trading a bunch, you're going to see that spill over into VIX futures themselves.
I think we are seeing those numbers. You talked about that yesterday on the option block, the numbers hot off the presses from OCC yesterday before our show. I don't have them in front of me right now, but we did see yet another month of increases out there in VIX futures. That's a product area that has been languishing for over a year. You would have thought, all the vol explosion of the pandemic would have given a nice shot in the arm to VIX futures volume, but not so much. Everything else was exploding except VIX futures pretty much. Now, last month and then again the month before, these are the first 2 months where we've seen a noticeable uptick in VIX futures volume. Maybe some of these products coming back to life and having a little bit more to offer. Maybe that's translating into a little bit more paper out there in VIX futures. Either way, something. Everyone was waiting for kind of the return of the new flavor of XIV, but it seems like we're getting that uptick without that. Before we keep rolling, speaking of UVXY and VXXU, and a lot of our listeners have been writing into us, now that they've both kind of done their reverse split dance, both of them got back up to around 40 before both of them gave up the ghost pretty aggressively. A lot of them asking us which we prefer from a short perspective out there. Which one do you think is going to be the better performer to the downside? So I'm curious. I'll ask that same question to you and out there right now, looking forward, let's say a month or whatever. You want to go longer term, 6 months or a year. Which one are you favoring to the downside these days, VXX or UVXY?
Oh, without a doubt, you could ask me that question every single day of my life, and it would be UVXY. And I mean, it's higher leveraged. But even taking that into account, the decay of these things is proportional, not linearly proportional, but proportional to leverage. So you're playing this for a decay, leveraged ETFs decay, as well as, VXX decays because of the contango effect, but UVXY decays on top of that because of the leverage. So, yeah, UVXY a million times every day and twice on Sundays.
There you go. That's the answer most people have been putting out. I wanted to give you a chance to chime in as well. Speaking of UVXY, coming into Showtime was at about right around a 34 handle. Listeners puts it off almost a full point from where it was this time last week. We're seeing decent paper out there, even though it is coming off a bit as well. Obviously, I think some of the legacy symbology issues that plagued VXX in the wake of the reverse split are hitting UVXY now as well, because that ADV is down to 289,000. That's down nearly 30,000 contracts from where it was this time last week. Coming into showtime, I had only done about 49,000 contracts. Let's look out there really quickly to see if that has ticked up at all since we kicked off the show. It's up to about 70,000 now, listeners. So a little bit more action out there in UVXY out there today. Let's break down really quickly some of the top action out there in today's contracts. Yeah, we got about 5,000 of the June 36 puts for number one. They're going out today. Number two, 3,500 of the June 5.5 calls. Actually got some calls on the list going out. Let's see. These are next week on the 11th. Number three, 3,100 of the June 35 puts. Number four, about 2,600 of the June 35 calls. These are going out today as well. And rounding out the top five, about 2,300. So kind of a light day of the June 34 puts. Again, pretty much all these except for the 5.5 calls, all going out today here. So a lot of weekly action out there in UVXY. Speaking of action, let's look really quickly at a top 10 size positions. I use size in air quotes because they're a little bit smaller out here in UVXY listeners. Let's just do a top five here because we're kind of coming up against it. I want to make sure we get you folks on the show as well. Number five, 17,000. Again, same legacy issue, UVXY1, VXX1. So some of these strikes are a little funky. 17,700 of the June fives. Number four, almost 20K of the June pars. The par calls. I've talked about these before. These always bring a smile to my face every time I see them. There's almost 20,000 of them open. Number three, 25,000 of the June 14 calls. Number two here, 30,000, almost 31,000 of the June 10s. And rounding out the top spot here in UVXY this week, the June 5 calls, 43,000 of those bad boys. If you're wondering, there is only one put in the top 10 in UVXY right now. It is all calls all the time. Of course, I think that will change now that we are split adjusted going forward. Mr. Meatball, another vote here for UVXY this week in the short vol race between VXX and UVXY. I should say really the erosion race between VXX and UVXY. But what was lighting up your tape out there in UVXY this week, sir? Like
I said, I probably put on 6 or 7 different short, long put plays in UVXY. I'm looking for it to dip below 30 by the end of next Friday. So I think that the path lower is going to be quick and mighty for UVXY.
The path lower, well, so far already has been quick and mighty, but going forward, it could indeed be very mighty. Both of them, VXX and UVXY, have had very quick and very mighty paths to the downside. If you had told anybody we'd be off nearly 10 handles in both of them since the reverse split, people would have said, that's maybe a little bit of bridge too far. But in 2021, I don't think that phrase even applies anymore. There are no more bridges that are too far. They're all within reach if you try really hard enough. All right, looking out here to the single name vol space really quickly. We touched on this a lot at the top of the show, the madness going on out there in the meme names. If you want something a little bit more defined, you can head on over to theoptionsinsider.com. Click on the options news and articles tab there, top right corner of the homepage. That'll get you to our earnings move results, and earnings season volatility reports, courtesy of our friends over there in Orat's land. Still some names popping off this week. We had Zoom, Hewlett Packard on Tuesday, the enterprise side. Wednesday had everyone's favorite SPLK, just fun to say, and Cloudera. Thursday we had Ciena, Broadcom, Lululemon, and Slack. We do have some results reports. We have SPLK here really quickly. They were after the bell on the 2nd. They were at 123.79 when they announced they were pricing in 6.6%. And they actually outperformed, down nearly 9%. So a little bit of outperformance. That's a rare thing if you've been following earnings vol like we have over the course of the past year, listeners. Ciena, they were on the 3rd before the bell. 54.5 is where they were at the time of their announcement. They were pricing in 6.6%. They delivered about 8%. So again, a little bit of outperformance. That's a bit of a rare beast. If you know, looking at our earnings season breakdown, listeners, you'll see just how rare that is. Right now, we're averaging about a 74%. So if you went out and bought some basket of earnings vol for the season, you're getting back 74 cents on the dollar out there. And some weeks it got a lot worse than that. Week 2 was 51%. Week 3, 65%. And last week was 62%. So still, I mean, Matt was talking. He thought this might be the cycle where the vol would start to turn. We start to see a little bit of vol outperformance. But so far, this cycle is playing out like every other one since the pandemic, whereas they come for the vol and they keep coming for it. throughout the entirety of the cycle. So if you want to see that data for yourselves, theoptionsinsider.com. Got more popping off later next week. Lululemon is coming up. Actually, they're after the bell. Yes, so we should have that result report any minute now. And then we got Marvell and a bunch of others next week. So stay tuned for that. Now it's time to stay tuned for your questions. It is time for the volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options. or facebook.com/theoptionsinsider.
All right, let's get to it. Let's see how many of you we can squeeze on here onto the show. Abel7's been waiting patiently. Sent in this question a while ago. He says, I've heard many people on your network say that GameStop trading around 1,000% implied volatility was something that they, quote, they'd never seen before or, quote, never thought was possible. Why is that the case? I have to imagine that some crappy biotechs or others have done this before. Is this really so unprecedented? Well, we kicked off the show, EUAN, talking exactly about this and how you thought maybe it wasn't that unprecedented. So what do you have to say here for Abel, who's asking why everyone's so in a tizzy about names like Game trading at these exorbitant levels of implied volatility, EUAN?
Yeah, I mean, realized vol probably happens like that all the time. Like you said, garbage biotech stocks and penny stocks. The difference here is we're seeing it in implied vol, and that's because it's a big enough stock to have options, whereas most of these garbage stocks just don't have options. So I wouldn't say it's unprecedented, but it's certainly, I don't recall a situation like this before in terms of the implied vol.
Yeah, and some of the crazy correlations that have sprung up. Mark was just talking yesterday about VIX and AMC suddenly correlating, and people come on here talking about how they set up their risk profiles and trying to run stress tests. You have to stress test things now that you never thought about before. Who would have thought of a basket of quote-unquote meme stocks coming into 2021? Yet that is what you have to look at now from an overall vol and a risk perspective. So there are many aspects of this Abel7 that are unique. It's just not in and of itself the event. It has happened before. You're right. Some crappy names have shot up to this level before, but maybe not certainly for this sustained period. And it certainly didn't get this much attention or notoriety out of it. So that part is certainly unique as well. Next up, Troy. This is a question I expect we're going to start getting a lot now, and maybe indicative of where we are in the vol space right now. Troy wants to know, is it worth it now to structurally carry some upside vol positions, probably long calls or spreads in my portfolio alongside my long SPY? Which do you think offers the more bang for the buck here? VIX calls or VXX calls? Mr. Meatball, we'll start with you. You've been very disparaging about VXX calls, not without merit. Their lifespan is, shall we say, very short-lived. But what do you have to say here for Troy? First off, two-parter. First off, is now the time, we've been talking about this, is now the time to start putting some vol upside in your portfolio? And if so, what do you lean in, VIX or VXX calls, sir?
Now is not the time. The thing about vol, and I've said this, and I'm gonna guess Ewan's gonna agree with me. Mike and Matt Thompson will talk about this. You buy vol when it starts to go up, not in anticipation of it going up. But if you have to buy any kind of upside, you want to play in VIX, not VXX, because the nice thing is that VIX has this kind of sticky strike phenomenon where VIX will stay in a range and then pop. It doesn't kind of decay away from the strike like VXX does. So when I'm hedging, I only use VIX if markets aren't going up. If I'm going to use VXX or UVXY as a hedge, I need to see my VIX light going green, and I need to see futures basically flat or even in backwardation before I would even consider going long those products.
And along those lines, I remember you were on this show a number of years ago now, I believe, and you made a statement that is still probably one of the more controversial things people have said on the network. Even though I don't get it, I thought it made total sense. But for a lot of our listeners, it got them up in arms. You said something along the lines of, when VIX is extremely high, you may want to think about buying it rather than selling it, and vice versa. When VIX is extremely low, that blew everyone's minds. They're like, what are you talking about? They thought that was very contentious. Again, I think it makes a lot of sense, but it may imply here to this question from Troy, who wants to know, is now the time, EUAN, to start loading up on volatility upside? And if so, what is your preferred vehicle? Are you with Mr. Meatball? You like the VIX better? Are you perhaps a devotee of VXXer?
I'm surprised that everyone thought that was so contentious, because it's really easy to check.
Yeah, I was surprised.
It shouldn't be that contentious to anyone with a spreadsheet.
I was surprised as well, but it certainly resonated with our audience. It still does. Every now and then people bring that up to us on the show. So there you go. You're remembered for that, if nothing else, sir.
People being wrong is good for me, because I'm on the other side of it. Yeah, I agree with everything Mark said. I wouldn't buy it now. If you make me, I'd buy VIX calls, and then VXX, and then UVXY. But I wouldn't buy it now. I don't see any reason to.
There you go. So, Troy, the first part of your question kind of negates the second. Now, perhaps not the time to load up. I think we all can concur on the second part, definitely, that if you want to go that way, VIX, definitely a little bit better bang for your buck than the much maligned, but perhaps deservedly so, VXX calls. Speaking of getting maligned, it's time to see if that's going to happen to us. It is time to check the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball, the portion of the show where we attempt to divine what the vol gods hold in store for us for the coming week. A difficult challenge, especially these days where there's so many different irons to throw into the fire. This time last week, we were heading into the long holiday weekend, and we were not that far from the levels we are right now. Coming into the end of the show here, we have spikes at almost exactly 16 3/4, and VIX cash flirting between 16 1/4 and 16 1/2. It's called like 16.35 or so. So that actually puts me about a tenth of a point away. I was at 16 1/4. So that's in pretty much within our margin of victory out there. So I may have to take that one. It's been a while. We've been vacillating around quite a bit out here in Volland, but I wasn't feeling a lot of change. Remember from this time last week, listen, I thought we'd erode a little bit, but not a ton. And that's pretty much exactly what we saw over the course of the week. Mr. Meatball, he says he was fading his book. He was going to the upside at 19.19. So no bueno there. I'm hoping his vol book fared better this week. And our guest, Mr. Dave Lincoln of the short vol fame out there, was feeling his short vol oats at 15 1/2. So it looks like a little bit of erosion, but not farther, carries the day this week at 16 1/4. And this is, of course, the portion of the show where we have to look ahead and try to predict where VIX and or spikes will be at this time next week. And you know what? I'm a charitable host. So I won this week, but I'm going to allow you the pride of place, Ewan. You get to go first. What are you feeling for this time next week from a VIX perspective and spikes?
Well, I don't really have a lot of conviction of anything at these levels. We're sort of sitting around, long-term average, long-term median. Gun to my head, I'd say 15.1.
You have a lot of guns to your head during the course of the show here. You make me sound like I'm a violent taskmaster forcing you to make all of these predictions out here. But there he goes. Gun to his head. His prognostication, listeners, is a 15.1. So feeling some more of that vol getting squeezed out of the sponge. You know what? I will also be charitable to the Meatball. You lost horribly last week, but I'll let you go next because I'm just that kind of guy. Mr. Meatball, sir, what are you feeling for this time next week?
Well, I got to fade it works so well, I got to fade my book again. I'm going to go 18-18.
All right, an interesting year and also an interesting vol bets for this time next week. So we got quite the market there, 15-10 on the dark side and 18-18 on the light side. I got to admit, I am feeling a little bit more juice coming out of the old sponge this week as well. Perhaps not as much as you in there. I don't have a gun to my head, though. I'm doing mine much more freewheeling, free-spirited fashion here. Let's go. I'm going to say a 15.75, so down a half a point from my prognostication of 16 1/4 last week, which was my winner chicken dinner for this week. So there's your vol market for next week, listeners. 15-10 on the dark side there for EUAN, 1575 for me, and Mr. Meatball once again playing the Russell Rhodes role of buying all the vol at 1818. All right, everybody, that music means we've come to the end, at least for this volatility journey. But if you want a little more in your ear hole, stay tuned. We'll be back in exactly an hour with the return of the program you folks have been asking for years now. The old volatility views. Oh, excuse me, volatility views. That would be this one. The old options oddities. So stay tuned for that. Should be fun. 2 Central, 3 p.m. Eastern. That one's going live. Everyone gets to check it out this week. So it should be fun. Goes pro only this time next week. So it should be fun. Stay tuned for that. But before we go, let's go back around the horn. Let's start with you, and you did an able job holding down the MIAX hot seat. You mentioned your books are kind of fewer and farther between these days. Maybe folks, if they want to keep up with you on social media, or you mentioned some of your blog posts, if folks want to check those out, where should they go? What should they do, Ewan?
Yeah, the blog posts will be at the Whole Tactical website, and you can follow me on Twitter at Sinclair Ewan.
So you're over there at Hull these days. What are you specifically researching? Give our listeners a little bit of insight into what you're doing over there these days.
I'm working on an actively managed ETF that incorporates volatility into a core S&P portfolio, which has a timing model as well.
Yes, the Hull ETF. I have been hearing about that for some time. Hopefully we'll see that come to fruition soon. In the meantime, of course, you can check him out on his blog, like he mentioned. Also give him a follow on the old Twitters at Sinclair Ewan, SINCLAIR Ewan, all one word. And Mr. Meatball, where should folks go if they want to keep up with your Gamma Trader and all the other fun stuff that you have going on over there, sir?
Yeah, head to optionpit.com. We put out, blogs every day around VIX trading, general market commentary. There's just a ton of really good, actionable content there. And Ewan, I do want to throw one quick thing out before you go. Here at Volatility Views, we only describe vol changes in absolute terms, never in percentage terms.
I think there's a time and place for different units in different contexts, but I can see you follow the Twitter arguments on that one.
That's been a long-standing bugbear of Mark's, Ewan, that he can't stand when people talk about vol as a percent of a percent. This is going back nigh on a decade with him now, so we can get into that conversation again. We don't, unfortunately, have time today, listeners, but you know where to go if you want to check out more about all things spikes. MIAXoptions.com/spikes. You got the data there. You got the press releases. You can see when all the new stuff is coming out. Of course, links to a cool show like Vol Views. What more could you need from a vol-oriented destination? While you're checking out MIAX stuff, check out MIAX.shiftsearch.com. That's that cool tool that John Smallman was talking about here on the show a few weeks ago. They update it every Friday, so there should be a new bell and whistle coming up there. In fact, they just added, like I mentioned, the meme stocks mode a few weeks ago. Now it's pretty cool. It's all free. It costs you literally nothing. If you want access to some cool activity and unusual analysis and volatility data, you could do worse than checking it out. It's completely free. MIAX.shiftsearch.com. On behalf of the folks over there in MIAX land and Ewan and Mark and indeed myself, thank all of you out there for downloading, streaming, subscribing, for listening live, for sending in your questions. Keep them coming. Remember, we'll be back again. This is not the conclusion of our broadcast week. We'll be back in an hour, a little bit less than that now, to break down the world of unusual activity. There's a lot of it this week. Let's see how much we can squeeze in for options oddities. Then we're back again next week, kicking it all off on Monday with the option block, all the way through to Friday and another episode of Volatility Views.
Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, SPIKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about spikes at MIAXoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. Volatility Views is also brought to you by Matrix Executions, LLC, an agency broker-dealer focused on best execution and trading workflow automation. A technology-driven firm, Matrix is led by trading pioneers with decades of experience designing and building best-in-class solutions for options markets. Matrix connects to all domestic exchange venues and multiple international exchanges and serves both institutional and individual clients. For more information on Matrix Executions, LLC, please visit matrixexecutions.com. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.